The Rebel Capitalist Show.
Do you think there's a way they would try to thread the needle to kind of have their cake and eat it too? And what I mean by it, because and I want to kind of clear things up here and put this into terms that I think my audience will understand. When you're talking about the banksters pushing back, we got to understand that they set up this Eurodollar system to benefit them going all the way back to the 1950s. So I always say that it isn't necessarily the dollar that's the global reserve currency, but it's the dollar infrastructure. And these banks make a tremendous amount of money on that infrastructure. So they are heavily incentivized to keep moving forward with the system we already have in play. So even if these global governments are saying, hey, we want to move out of this dollar system, this Eurodollar system, and start keeping our reserves in gold instead of dollars, or a claim on dollars, basically a treasury, then they're going to get a lot of pushback from the Jamie Dimon types, and who knows how much power and control they have over the politicians at the end of the day. But this, correct me if I'm wrong, but this assumes that by the countries themselves opting for gold instead of treasuries or dollars, that the dollar would no longer be the world reserve currency. Is there a world in which the dollar is still the reserve currency, but goes down, let's say, to 50 on the DXY, so the United States can bring back that manufacturing base to appease the defense group in the United States, while at the same time allowing the banksters to continue with their dollar infrastructure, the dollar being the world reserve currency, but just the dollar is devalued basically against all of their currencies. Am I missing something there? Is that possible? What do you think the probabilities of that are?
That's my base case. I think the dollar will be reserve currency for, my lifetime. I don't think it, but I think it's going to be restructured. If you look at pretty much everything I've ever written, tweeted, anything about this, I never say the dollar's reserve status is going to end. I'll say the post 71 status is going to be restructured or will be changed. The problem is that we use the dollar as a reserve currency and the treasury as primary reserve asset.
Right.
And that's the real issue, which is it forces us to become the Saudi Arabia of treasuries.
Right.
And not make anything else. And so the dollar was reserve currency from 46 to 71 with gold in the mix. So there's more there than it's just this restructuring. 46 to 71, dollar was reserve status, and the U.S., did well in the Cold War and had a booming economy and low inflation and a whole bunch of really good things. So I think you can, and by the way, was industrialized enough to actually be able to fight multiple wars and the Cold War without help from another nation, which I think is the key point in terms of the logistics, supply chains, and the onshoring that this would drive. So my base case is that we go back to some sort of system with dollars still a reserve currency. Treasuries are no longer the primary reserve asset, and you got to find more demand for those. And you can see the regulations; banks have to buy them for capital and liquidity needs and collateral needs, and so that they're creating demand that you have to hold them in the domestic banking system to, I think, basically try to ready for this, basically, or at least to sort of deal with the deficits we're seeing. It's probably not the ready for this, but it's probably to deal with the deficits we've been seeing in the absence of sufficient foreign buying of these treasuries. But yeah, it's my base case. Is that basically you will see gold? It'll be gold at a floating price, as opposed to, the problem with Bretton Woods was not that it was gold. The problem was it was gold pegged to the dollar, and we were printing too many dollars, and we ran out of gold, or before we did, we closed the gold window. If you use it as the settlement asset on a floating basis, when the U.S. starts running deficits for that, gold starts rising in dollars and rising in dollars and rising in dollars. And at some point, it's going to force, it will force higher inflation, higher economic growth. There will be, listen, you want to go fight a war, great, but you're going to fight a war and it's going to inflate your economy. It's not going to inflate the Europeans and the Chinese and the Japanese, which is really what the neutral reserve asset setup does. And I think that's where this is going. I think it has to go there, because the alternative is, as much as sort of the financial side of the U.S. House doesn't like it, the alternative's horrifying. They haven't thought through what the alternative is.
Yeah. How would it work? And this is probably a stupid question, but how would it work if we had a trade deficit and gold was the settlement asset or the reserve? I mean, would it go back to kind of the way things were on a gold standard, where if we ran, let's say, a $100 billion deficit for 1 month, then we would be able to send them dollars, or would we have to send them gold? And would it work with it? I go back to Hume, where he talked about that. I think it was called that price specie flow mechanism, where if one country is running a significant trade surplus, then they're going to receive more gold, which would increase their domestic money supply, which would increase prices and therefore give them a competitive disadvantage. And the country that ran the trade deficit would have an advantage. So you kind of get this equilibrium. How would that work under this new kind of 1971 restructuring of the dollar deal?
To me, I think it really would center around energy, right? Where I think everybody, you'd basically peg gold to oil, right? So you say, whatever, 100 barrels an ounce, 200 barrels an ounce, something, right? And if you want cheap oil, you have to have cheap gold. Your currency has to be strong in gold if you want to have cheap oil. So China wants cheap oil. It wants to build a consumer society. Europe has to have cheap oil for all the production they do. Japan. So you're going to have the yuan for China strong against gold, low gold price. The United States, on the other hand, actually has a robust domestic production of oil, and at the right price, we can produce a lot of it. And so we, on average, it's better for us to have a higher oil price. Well, if we want a high oil price, we're going to need to have a high gold price. The dollar will have to be weak in gold. And I think if you basically, through the flows of energy, pegged the gold, it basically goes from a centralized, the Fed makes monetary policy for everybody, and you guys all deal with it, which is running into problems because of debt and peak cheap energy, to the major currency blocks make decisions based on energy policy, based on what's best for their citizens and their own economic needs, and decentralizes that decision making, right? So Europe wants, cheap oil so they can produce stuff. And by the way, this isn't just about taking away the US's sort of monopoly of, hey, we can have cheap gold and expensive oil, and it's great for us and it sucks for everybody else. This is also about, the mercantilism of China, right? You want to have a cheap currency, then you're going to have cheap or expensive energy, right? So or if you want to have a cheap energy, you're going to have an expensive currency, and then it comes down to being able to compete. It's actually a free market, which God forbid.
Yeah. So I think the pushback from most people would be, okay, Luke, I get what you're saying, but it doesn't seem like there would be enough incentive for the players involved to move to this new system. So why don't we just go over kind of the key players that have different needs and wants? So maybe like a China, because they're long dollars, short energy, maybe a Russia because they are long energy, and then maybe compare that to the United States or maybe Saudi Arabia if you think that's a better example. So starting just country by country, how would this new system benefit, and what would be the pros and cons for China, let's say, a country that's long dollars, short oil or energy with this new system?
So let me take it the other way. What will move people there is, I think, as the situation of not moving there gets closer. So if we don't do that, let's keep running this system out. The Americans can't afford to have positive real rates. They need -10, -15% real rates for the next 5 to 10 years, just mathematically. Next 5 years, next 3 to 5 years, right? Okay, so now you're gonna need 10% inflation, 0% rates in the US. Okay. So inflation in dollar terms is going to rise. Energy prices are going to rise dramatically as that happens, because who wants to buy treasuries or any bonds with that happening? Fed's going to have to do yield curve control. No, they're going to have to cap yields at 2 or 3, whatever they are in treasuries. I don't know when that happens. It doesn't really matter for purposes of this point of here's our alternative. Real rates have to be negative because the debt level is so high in the West.
And the off-balance sheet debt that you talk
And the
about all the time.
off-balance
It's
sheet
not
debt
just
is
the
so high
30
in the
trillion, it's the 150 trillion or whatever it is in unfunded liabilities.
Right. So you got to keep real, but now you've got no one that wants to buy that debt. So the producers in this whole system, the commodity producers in particular, go, why would I sell my oil, my grains, my copper for that? I'm not selling it for that. I'm going to leave it in the ground. I'm going to pull out just enough to pay my dollar debts, and the rest of it, I'm leaving in the ground. And so commodity prices now rise. So now inflation picks up. As inflation picks up, pressure on rates rise. So now the Fed has to buy more because more bondholders are selling into that. This, you will see the global trading system break down catastrophically, and people will starve for lack of energy and food.